Stations live, including podcasts and much more. Simply download the SABC News app to your Android or iOS device from either the Play Store or the App Store. SABC News, independent, impartial. Welcome back. Let's get into that market picture now. And we start off in the Far East, where Asian markets were a bit mixed this morning as another rally on Wall Street from yesterday came through, and data indicating a strong U.S. economy were offset by the increasingly tense trade and technology standoff between China and the United States. Now, the Brexit saga also moved back into view, with the pound at 3-month lows on renewed concerns that Britain will leave the EU with no deal, as Prime Minister Theresa May tries to push her divorce deal through again. Now, Tokyo's Nikkei was the only index in the black at the close of trade today, rising 0.9%, 21,250 points. The Hang Seng slipping 1 2/10% there, while the Shanghai Composite received an absolute battering of 2.5%, 2,882 points. Let's head on over to the United States now, where Wall Street closed higher on Thursday. That's as upbeat earnings and strong economic data put investors in a buying mood, with technology companies leading the charge. All three major U.S. stock indices paired gains late in the session, adding less than 1% and bringing the bellwether S&P 500 close to 2%, just below an all-time high that it reached on April 30. While the escalating U.S.-China trade tariff war continued to be a concern for market participants, upbeat quarterly results and data pointing to a strong U.S. economy helped ease trade-related jitters. The Dow Jones Industrial 0.8% better, S&P 500 up by a similar mark as well at the close of trade, and of course then the Nasdaq Composite gaining the most on that front as well, around 1.2% by close of trade. Let's head on over to the market picture now and see how things have fared. Of course, it has been the China tariff situation which has been of keen interest across the market picture. On the local front, or rather on the European front, you can see the markets are all down today, and perhaps sentiment around Brexit and that deal have certainly been key figures and key pictures. One would have hoped that the Chinese story and Chinese US story would have perhaps eased off by now, but clearly not. It is playing some part in the market as all of Europe sort of heads in a much lower direction. On the local front then, the JSE also headed lower, having seen some positive numbers of around 0.88% in terms of gains yesterday on the local bourse. Unfortunately today, drawing some of that back and still sitting just above that 56,000 point mark for the all-share industrials and financials, all going down. But if you take a look at the resources sectors, then you'll see that there was some positivity yesterday with regards to that resource counter, as of course the higher price of resources does mean that the resource counters then fare and look a little bit better. And today that sentiment sort of continued, despite the platinum counters, however, going marginally lower at present. Taking a look at your commodities picture, gold's at $1,285 a fine ounce. Of course, headed off to riskier assets, heading away from riskier assets into safe haven assets is what has happened for some time, but unfortunately not staying that way today. $819 for platinum as things continue to shift away from that metal. That price really going down quite quickly. And look at that. Brent crude headed towards $73 a barrel. Of course, supply concerns out in the Middle East as Iran and the United States continue their tense battle. And the currency, South Africa's rand, they're getting a little weak at 14.37, having headed to around 14.15 or so yesterday. So some weakness coming through with the market picture there, with the rest of the market, as you can tell, just weakening as well, with the British pound and the euro headed weaker. All right, so let's unpack this market picture now. And we're joined, of course, on the other side of the world here by Warwick Lucas from Galileo Capital. That market picture, as I said, has been one that we focused on with regards to China and the United States. That has been the picture for the week. And, of course, in South African terms, we have had the unemployment numbers come through as well. What does all of that mean then for South Africa and the global markets as we chat to him now? Warwick, thank you so much for the time. But it has been a time when we've had to perhaps try to find some other news, but it's difficult to when all you can see is China and the United States. Has that shaped up the way we expected?
Well, I think it's turned out to be a more pessimistic scenario than markets might have hoped for, that sabres are getting rattled, and I think the key issue here is it a bit of last minute positioning, or is it going down into the trenches and settling in for a longer struggle? And it's difficult to see, because I mean, this is partially a political struggle. You know, one of the things that we're seeing coming through in recent times is more and more countries, instead of sending young men to fight and die wars, they're militarizing their economies instead. So this sort of weaponized economy is something that markets are still trying to digest. But that said and done, the consequences of a trade war are, I think, on the second round, markets are starting to take a view that it's rough, but it's not all fall down. So China, for example, has an economy that is much less dependent on exports than it used to be. I mean, one of the big transitions that was being looked for in the last decade or so was a China that had a much more consumption-orientated economy, and that has been coming through. And so yes, they can still hurt each other if they really just dig in and be utterly intransigent. So we obviously hope that scenario gets avoided, but it's not all fall down if they do.
Yeah. Is it becoming a techno-trade war, though? Considering, of course, Huawei has been now sort of roped into this mess.
IP is very much an important part of this sort of political, economic axis that's there. I mean, the requirement that the West has that China recognizes and protects intellectual property, I think, is a very important cog in this whole machine.
All right. If that trade situation then escalates any further, how much more can the U.S. economy take? A little earlier this week, there were even thoughts of a recession. There were calls and fears for what could possibly happen in the United States. Is that economy perhaps a little less resilient than China, who have now this morning said that this trade war will only make them stronger and will never bring that economy to its knees? Okay,
so if we talk in terms of slack capacity, I mean, the U.S. does have quite a lot of capacity to take hits. I mean, you just have to look at record unemployment for the States. I mean, 3.6%. That really is an economy that's that can take that kind of pressure. And I think it also explains some of Trump's testiness with the Fed, because loose monetary policy would offset the GDP hit that you would get from a trade war, and perhaps the Fed does have room to cut, as the Bloomberg rate cut poll seems to be indicating that it's quite possibly on the cards.
I mean, with growth in the first quarter having obviously been a little higher than they expected as well, at around 3.2%, perhaps it is that time. But here's another discussion that still involves the United States, Iran, right? And the situation there in the Middle East, things perhaps getting a whole lot more intense with regards to tensions in the Middle East. And just this morning as well, we even got word that China has now gone on to buy oil from Iran, despite the sanctions that have been put on Iran. That's 2 million barrels that an oil tanker, which belongs to one of the Chinese companies, has taken on. How much more does this seem like an attack and just almost a finger to the United States almost?
Yeah, well, certainly it's a second front, shall we say. I mean, it is quite a large rolling battle that's going on here. I mean, as I say, I mean, if economic and political conflict is now taking shape in an economic battlefield rather than a physical battlefield, it's going to look messier than we might have been used to in the past.
One would hope in a time when the world is getting turbulent that we would remain some sort of, or give ourselves some sort of stability, but unfortunately that isn't the case. Unemployment at its worst since the third quarter of 2017. That hasn't helped things along, but now they know the dire situation if they didn't know it before.
Absolutely, and I mean, as an economy in which commodities and resources do matter so much, I mean, I'm afraid we're the tail on someone's dog somewhere. We are sensitive, and we certainly some fairly important basic interventions are necessary, both to get the unemployment halted and improved, the economy going, and to deal with the prospective risk of downgrade by Moody's as well. Yeah,
and they sent out a clear warning as well then, right? That
unequivocal.
I mean, if if they do downgrade us, that is the last salvo. We're officially, junk status. I know a lot of people have definitely priced it in, but is it becoming a sense of taking things for granted somewhat?
Look, I mean, it's gonna take a lot of work to retain that credit rating. That's for sure.
Yeah. Very finally, we didn't get to touch on this, but just MTN, perhaps your thoughts on just the entity. Listing in Nigeria doesn't necessarily give them money, but would it help their relations, you think, with the Nigerian authorities? Does it perhaps help that relationship there?
Very much so.
Yeah.
It's, I mean, we could see from the heavyweight board that they appointed a couple of weeks ago just how political these cell phone companies actually are. I mean, if you think about the Arab Spring, how it was cell phones and Twitter that helped mobilize protesters to different places. So these cell phone companies are a key part of the communications infrastructure, and I think MTN has realized just how important they were, how much of a target they were, and most importantly now, with listing in Nigeria, yes, they didn't raise any important amounts of money at all, but it means that local Nigerians now have skin in that game and are hooked into making that work and make sure that some kind of political balance is kept.
Yeah, we'll see how things fare there and how that relationship goes. But Warwick, we appreciate your time as well this Friday.
Pleasure.
Enjoy the rest of your weekend as well. That's Warwick Lucas from Galileo Capital. That does bring an end to this segment with regards to market sense, but we do continue to give you the latest with regards to the economy, and even your money joins us a little bit later on. This time around, we got to speaking about your ideas as an entrepreneur. Sometimes they're not as successful as you'd like them. How do you perhaps take them forward, protect yourself, and ensure that your idea still stays safe? All that and a whole lot more coming up right after the short break with my colleague Nzinga Kunta. This is On Point.